Hello and welcome to ET Now Startup Central, the first and only daily show in India dedicated to startups and entrepreneurship. I'm Krishna Kumar coming to you live from ET Now's Mumbai studios, and we have a power-packed show lined up for you over the next 20 minutes. First up, we have a very special guest joining us, Ben Mathan of Vertex Ventures, the venture capital arm of Singapore government-backed Temasek, and we will be chatting with him about the company's startup bets here in India. And next up, we have another big voice on the show, Govind Srikhande, Managing Director of ShopperStop, talking about their brand new app and how the company expects online sales to contribute 10% in 3 years from a mere 1% now. Startups across India are tapping into IBM's cloud platform to run critical applications and grow their businesses. A chat with Arvind Krishna of IBM Research on how they're helping startups scale up. On our special segment, Budding Star, we feature HackerEarth, which is not only a platform for developers, but a gateway for companies looking to hire quality engineering talent. And on our special segment, Decode, we have K Ganesh, the co-founder of Growth Story, to help us decode unit economics, the new buzzword for startups. So we kickstart the show today with a big investor voice. Even while pessimism around funding cycles refuses to die down, one section of investors have maintained that while the focus is on unit economics, funding has not only entirely dried up for good companies, but we have Ben Mathan as India Managing Director of Vertex Ventures, that is backed by the Singapore government, joining us here on the show to discuss that and more. Ben, thank you so much for taking time out to be with us here on ET Now Startup Central. Tell us, what trends are you seeing in the investing environment over here? Is all the caution over funding justified, or is it overdone?
Yeah, so the caution is in terms of some of the large funding rounds that we saw last year and the year before that. Those have probably come down a little bit, and to be honest, some of those funding rounds are probably too much money too early in the life cycle of the company. So that is we've come back to the old normal, which is what it should be, where companies get capital, where they have actually executed on their business plans, where they actually have something that they can show positive unit economics, they can show good growth, and they can also show a path to profitability. So those sorts of companies who do have those types of characteristics are raising money and will continue to raise money.
Ben, I wanted to get into specifics over here. Any particular, any specific segments that you want to talk about over here?
No, I think the segments that are currently being looked at by investors, the consumer segment, of course, is of a lot of interest to investors, and rightfully so, because every month we're getting tens of millions of new consumers coming online as they buy their smartphones, as they get data plans. They are starting to buy products, buy services online. The other segment that is gaining a lot of importance is the SaaS segment, and which has not been talked about as much, but we are seeing a lot of SaaS companies emerging out of India, products being developed out of India, but being sold to the global market, to enterprise globally, and very price competitive, because it's comparable products, equivalent products to to other companies that are building those products in the developed markets, but at a significantly lower price.
All right, Ben, you were talking about SaaS. A Google Axel report, in fact, released recently, spoke about the huge potential over there. Is that something that you will look at closely? Tell us what exactly is driving interest in this area?
Yeah, so I am looking at SaaS quite actively. In fact, in the process of doing a SaaS investment right now as we speak. And I did see that Google Axel report, and I think they were right on. So the fact of the matter is that India has a very large pool of software professionals that are currently working at some of the large enterprise software companies. So they understand what is required from an enterprise software standpoint. Cloud computing has made it easier for these companies to build software out of India and sell them globally. And they can be sold on a pay-per-drink model, pay-as-you-go model, so or on a freemium model. So the risk for an enterprise in the US, for example, buying software is a lot lower, because they're able to buy software on try before you buy model. Try it for 1 month. If you don't like it, then stop. You don't lose any money for it. So we're seeing enterprise software companies being built out of India that are acquiring customers at a very rapid pace, and the cost of customer acquisition is very low, such that they can actually recover that cost of sales in a few months.
All right, Ben, let me speak on behalf of all the startups watching the show. If they want to pitch to Vertex, what are the things that they should keep in mind to receive funding? Tell us.
Yeah, so several criteria that venture capitalists typically look for, and I'll state the obvious ones. The obvious ones are you have to be going after a large market. You've got to be offering something that's unique, that is not offered by anybody else. So if there are already 10 other companies doing what you're doing, then you're probably better off doing something different. Secondly, in addition to that, you've got to be selling something that people are willing to pay for, and willing to pay you a price that is sufficient that you'll make money on it. So again, to go back to an example that is used very often, if you're buying something for 100 rupees and selling it for 90 rupees, then you're in the wrong business. You've got to be selling that thing for 130 rupees and making money on every transaction. Those sorts of things excite VCs. And so look very closely at your business model. Make sure that it's a long-term sustainable cash flow generating business model, and that will get the VCs interested.
Ben Mathan of Vertex Ventures, I'm afraid we'll have to let it go at that. But thank you so much for taking time out to be with us here on 80 Now Startup Central. Moving on to another multi-brand retailer, a traditional multi-brand retailer who is betting big on the online medium to boost its sales after having launched its refurbished website and partnering with Snapdeal. ShopperStop is now focusing on its app to engage with customers. In fact, the company expects online to contribute 10% of total sales in the next 3 years from a mere 1% at this point in time. Govind Srikhande, Managing Director of ShopperStop, spoke to ET Now's Rahul Dayama in Bengaluru. Listen in.
We are very excited. We haven't yet pushed the downloads dramatically because we felt that we need to give it a little time to settle down. So you'll start seeing a lot of action happening from April and May. But I'm pretty excited that over the next 3 years period, our entire online share of business should touch 10% of our total business. That's the target with which we are making 60 crore investment.
How much is it right now? So
less than 1%.
Also, you partnered with Snapdeal. It will be close to a year now. In terms of the response that you're seeing from Snapdeal in particular, and how is it helping you in terms of top line?
Operationally, it is less than 3 months, although we tied up almost 8 months back. Our actual operations have just started 3 months back, and we are in fact revisiting the operational part because, as you know, marketplace site operates very differently than an online owned site. So we are going through some changes there as well. But there again, I believe that it has got huge potential because the number of visitors which come on Snapdeal and other marketplaces is 100x of what they come on my site. So I believe the potential is great, and again you'll see a lot of action happening from Q2 onwards there.
Lastly, in terms of exclusive partnerships, that's where you've been very active in brands. You have a very fulfilling private brand also that's really driving. What plans do you have in the coming few days?
Apart from private brands, we do have exclusive partnerships with exclusive brands. One of them is with Femina Flaunt, which has been launched to great success. We have another brand called RS by Rocky Star, doing very well. Wrong, doing very well. And our private brands, which is Top, Life, Kashish, Hot Curry, Eliza Donatel, we are relooking at their presentation, we are relooking at their advertising as well. And there again, you will see the whole store merchandising changing. In this quarter onwards, you'll see a completely new range in summer. And you'll also start seeing advertising happening for all our private brands.
So when larger push would go into your private brand, because that's where the margins are also much better.
Yes. No, not really larger push. We believe that in a market which is very heavily dominated by discounting, having more control on exclusive brands and private brands will help you to reduce the discounting in the market.
Moving on, cloud computing has played an important role in the growth of technology startups in India and in taking solutions to the masses. Recently, one of the new entrants in this domain is IBM with IBM Cloud. In a short span of time, several startups across India are tapping into IBM Cloud to run critical applications and grow their businesses. In fact, IBM announced an expansion of its global cloud network with a new cloud center in Mumbai in October last year. I caught up with Arvind Krishna, Senior Vice President at IBM Research, and quizzed him on the company's startup strategy here in the country. Take a look.
If I give you a number, I believe we have acquired 140 companies over the last 10 years, if I remember my numbers correctly. Okay. Don't hold me to it, it may be 10 or 12, but something like that. Okay. So we clearly purchase a lot of startups. Why do we purchase a startup? It's always speed to market, or it's about filling a technology gap. So clearly many startups could fill that opportunity. So just the numbers, I mean, that's a pretty large number if you look at the total. Yeah. The second, we want startups to also build on the platforms that we provide, be it a cloud platform, be it our cognitive platform, because that allows these platforms to then reach a lot more clients and reach a lot more customers than we ever could on our own. So when you're a platform, you're hidden, you're invisible, you're kind of under the surface of the ocean, and they're really the shiny thing on top. Okay. But we can give them the scale that they may not be able to invest in on their own. We can give them a lot of access to our R&D capacity, which shows up in the platforms, and then they can take that to build cool solutions.
Okay. And what are the kind of startups? In which spaces are the startups that you are most likely to engage with?
One is clearly startups who are looking to build a cloud solution. So cloud solutions are often around people who are building mobile applications to aid in productivity, using mobile to really help in businesses, unlocking potential for their employees. And the second one, which is really critical to us nowadays, is in cognitive computing. And by cognitive, we really mean helping an enterprise, be it in healthcare, be it in Internet of Things, be it around financial services, be able to use cognitive capabilities, which are associated with AI, but a lot more than just AI, be able to bring those to be able to unlock more potential for employees and clients. Okay.
I want to ask you this, do you find enough enterprise startups here in India, as you're looking to engage with more and more startups?
It depends what you mean by enterprise. So if by enterprise you mean startups that are aimed at selling only to enterprises, maybe less. But if I look at a startup that is going to sell to 1 million clients of its own, it is an enterprise. so I prefer to think of it that way. Two, many startups that are here sell to clients all over the globe. I mean, Tom Friedman's word was the world is flat. I think he changed it to the world is spiky. I think startups here are not usually confined only to clients in India. They sell all over the globe. And if they sell all over the globe, then they're going to be both enterprise and what I think we call B2C. I mean, they're going to be both kinds.
Moving on to our special segment, Budding Star, and today we feature HackerEarth, which is not only a platform for developers, but a gateway for companies looking to hire quality engineering talent. Rahul Dayama caught up with Sachin Gupta, co-founder of the startup, and quizzed him on their business strategy and expansion plans. Take a look.
So in just one line, HackerEarth is the hub of programmers. We have the largest platform where programmers from all across the world come onto the site. They solve problems across various concepts like artificial intelligence, machine learning, and so on. And they participate in hackathons, they participate in challenges, essentially to constantly improve their programming skills. And we then become a gateway because we've got this engaged community of programmers on our platform. We become a gateway for companies to build relationships with these developers. So it could be for hiring, it could be for building a talent pipeline, it could be for crowdsourcing solutions, or it could be just building a technology brand.
So what really drove this decision? You saw an opportunity. India has an exciting large pool of developers there.
Truth be told, it started on a very small note. I mean, me and Vivek started the company when we were just in college, we were just graduating, and we saw a problem which was very personal to us. So there was a colleague of ours, batchmate, and he didn't get through any of the top companies in the first week of the campus placements in IIT. And he was the kind of guy companies would actually kill for. And that got us thinking, there's definitely somewhere a gap here. People are not able to identify what's the right way to assess technical talent, and that's what drove us. So we started building a platform which has to be completely meritocratic, depending upon skills. People should be able to, developers should be able to showcase who they are just based on what their programming skills are. That drove the initial idea.
I know you have also helped a lot of companies find the right pool of talent. In terms of numbers, if you have, how many developers have you placed? Because we're talking about InMobi and the Flipkarts and the likes that have hired talent from your platform.
So we've got a very good question. We've got about 800,000 odd programmers on a platform today, which is obviously all over the world. The whole entire number of placements is kind of a confidential number, but on an average in a month, we've got 10 to 15 companies which are hiring for about 4 to 5 different positions at any given point of time. So that's the kind of demand that we're able to cater today. Obviously, this is going to grow as we grow.
Also, you have an international presence in over 20 odd countries. What plans do you have on the international front? How's the response that you're seeing from these countries vis-a-vis India?
So we've got a presence in almost 80 countries across the world, though the dominant user base is in India, but we've got a presence in Southeast Asia countries like Singapore, Indonesia, Thailand, Malaysia, and so on. Then we've got a presence in Eastern Europe, Slovakia, Russia, all the hardcore mathematical programmer user bases. We've got a bit of presence in Western Europe, UK, and all, and then North America.
Time now for our another special segment, Decode, where we help break down technical terms doing the rounds that you should absolutely know and understand. And today we have K Ganesh, the co-founder of Growth Story, to help us decode, quote unquote, unit economics, the new buzzword for startups. Listen in.
Yeah, unit economics basically means if you look at per order, whatever money you get from a consumer on an order, in that money that you get from the consumer, can you deliver that product and service and still make a gross margin, right? So for example, if I'm delivering grocery, if my order value is 1200 rupees, the cost of all the items that I pay for buying those items is 900 rupees, there is 300 rupees gross margin. Now if my cost of delivering that particular good, actual logistics cost of delivery is 100 rupees, if I remove that, there is 200 rupees left. Now that is unit margin. I also have to take into account the cost of acquiring that particular customer and how many times he will buy from me. But at a very basic level, what I recover from the customer, what it costs for me to deliver that product and service directly, and the difference between the two has to be positive gross margin or contribution margin. If that is positive, I can actually deliver more orders and make more money. If that is negative, the more orders I have, the more money I will lose. Unit economics is bad if with more orders you lose more money. Unit economics is good if with more orders you make more money in your pocket.
And finally, it's time for the number of the day. Time now to do some number crunching, and the number we're crunching today is 33,108. And if you're wondering what that is the capacity of the Wankhede Stadium in Mumbai. That is the number of the lucky people who will get to watch the semi-finals between India and West Indies in the ongoing T20 World Cup live at the Wankhede Stadium in Mumbai. There's a reason why to put that number up, because I'm sure every single one of you watching, those at least who are in Mumbai, are looking for 1 ticket or 2 tickets for that all-important semi-finals on Thursday. But net, 33,108 people will eventually end up being lucky to witness that encounter between India and West Indies live at the Wankhede Stadium in Mumbai. Well, I hope I'm one of the lucky ones, but for now we have to wrap things up here on ET Now Startup Central. Thank you so much for watching, but don't go anywhere. Keep watching ET Now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.